say about the economy, about interest rates? What is he looking to do in 2024? What about a wealth tax, aka redistribution tax? We can talk about my video yesterday with Anna Kelly and the emergency rate hike. I didn't do what this channel is about, and we will talk about that. We'll talk about housing starts, purchase applications, and we will highlight some earnings, folks. Let's get into Jerome Powell first. That was the big news, probably the big news of the week. Jerome Powell up in front of the media, taking questions, giving a presentation about inflation. And basically what he is saying is higher for longer. Jerome Powell is becoming a broken record. He is talking about the progress on inflation is slowing. Says that the Fed may not be in a position to cut this year. The Fed will stay high as long as required. Also talks about the restrictive policy that we are in currently needs more time, and it will take longer to beat inflation. So what is all of that? What did I think? What I think we are going through is Powell is walking a tightrope. He is really on a razor's edge, knife's edge, whatever you want to call it, because in reality, he has three options. But in practicality, I think he has one. So here are the three options, just logically speaking. Jerome Powell could raise rates. I think if he raises rates, based on my conversation with Anna Kelly yesterday, whether it's an emergency or not, whether it's telegraphed, you are going to see banking problems. You are going to see the stock market. You're going to see an economy quickly roll over into a recession. Quickly being 4 to 6 to 8 months, relatively quickly. If Jerome Powell decides to cut, which I can't believe the market is still saying, for example, as of this morning, Goldman Sachs and JP Morgan both expect the first rate cut in July. Again, I would ask their analysts, did you not listen to Jerome Powell yesterday? I think what I did on the Friday financial wrap-up with Ty, I think 2 weeks ago, for the first time I said, I believe the first rate cut will be November. I no longer believe the first rate cut will be July. I think it will be November. I think it will be after the election. I do not see them going up or down until November. I wanted to put that out on the daily financial news. So again, if they were to cut rates, say they cut rates like JP Morgan and Goldman say, what happens? Well, animal spirits take over. What does that mean? Well, once the Fed starts cutting, the market will expect more cuts, and we will see stocks, we will see basically risk assets turned on. So if they can't raise and they can't cut, what can they do? Well, they can do exactly what the Fed said yesterday. We're going to, the Fed may not cut all year. We will stay high as long as required. And we will need time for restrictive nature to work out. I want to talk about that time element. One of the things that is becoming painfully clear, in my opinion, is for the first time in my adult life, and probably in my parents' adult life, the economy is working through $9 trillion in helicopter money. We shoved $9 trillion, some say $10 trillion, into the economy, and that money is still floating around. It's on the sidelines, if you will. How does this get resolved? Well, I think one of the things that we have to acknowledge is the bankruptcy cycle. Losses have to happen. One of the ways that this will unwind is malinvestment, bad investment, will be punished. Just like the dot-com era. This is very much like the dot-com era where anything with the dot-com was valued at 100 times revenue, even though there was no profit, yada, 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 lots of losses. Unfortunately, I think one of the ways through this is recognizing losses. Unfortunately, that is not quick. That is something that will take time. Time meaning quarters, if not years. So at the end of the day, again, logically speaking, the Fed could raise, cut, or stay at their current level. I don't think raising is an option. I really don't think cutting is an option. So all he could do is keep saying higher for longer. I've been sent some videos recently about a redistribution tax. In the US, this is often called a wealth tax. I've been sent several videos with a young man in the UK advocating for wealth tax or redistribution taxes. I want to say that it is certainly possible to have something like that in the United States. I do believe there would have to be some laws changed, but yes, I do believe one of the ways out of the monstrous deficit, what is it, 34 trillion, 35 trillion, something silly like that, there are going to be new taxes created. I do want to remind you, when this is created, they will market it to you probably by saying, we are going after the billionaires. Probably. Which is fine. But don't forget, once you give the authorities that power, it will quickly, and quickly meaning probably in a decade, maybe two, that billion will go to 100 million, and then 10 million, and then 1 million. Once they get a taste of a new revenue stream, which taxes are revenue, they will keep going back and keep at it, in my opinion. So yes, many of you asked, do I think a wealth tax is coming? I have to say yes. It'll be interesting how they do it. Will they be going? They should be going after what is called carried interest, which is something a lot of hedge funds use. But yes, I do think a wealth tax, aka redistribution tax, is coming. When? I don't know, next 5 years or so. It would not shock me. We just have to eventually tackle this deficit, and one of the ways is new revenue. Obviously, inflation will help. Also, oh, by the way, Congress, stop spending money. I'm just saying. But yeah, so I do think one's coming. A lot of you have asked, so there's my opinion on that. Let's talk about the video yesterday with Anna Kelly. I created a video. It published, it talked about an emergency rate hike. The thumbnail said emergency rate hike. The title said that. It was undoubtedly clickbait. It was not what I wanted to do. I should have, and I have since changed the title to say, what if emergency rate hike? It wasn't my intention to be alarming or anything of that nature. I took the topic that Anna Kelly and I did, and I put it on the title and moved on like I do with all of my videos. But I should have put in what if. I have since changed the title. You can go back and look at it. I changed it when I landed in Vegas about 6 o'clock, 5 o'clock, 6 o'clock yesterday. So I appreciate the feedback, and yeah, I'll try to do better. Let's talk about housing starts. We got housing starts yesterday, and they were down. They were down 15%. Remember, folks, when we get this monthly number, they talk housing starts. Please never forget, when you get the monthly housing starts, it's single-family homes through quads, right? That's one side, and then 5 units and above. We have been talking a lot about apartments and multifamily crashing. Multifamily is down almost 21%. 21%. But yes, single family is down as well. But single family needs to be down. We have now rates at 7.5%. We need, what do we need? You and I both know what we need. We need entry-level housing. We don't need McMansions. We don't need million-dollar houses. We need single-family affordable housing. That is what I hope gets built. It is my hope that we build, on average, smaller homes, and we do it in great numbers. That is one of the only ways out of this crazy housing environment. What about purchase app? Purchase apps, folks, rates go up, purchase apps go up. How can that be? Well, we got to remember, first off, Easter was a couple of Sundays ago. So there's going to be some distortion in the numbers. But also, folks, I really, really want you to think about this. Consumers are having enough. They're going on tilt. And as Beth Traverso said yesterday, and she is so right, we have been here before. You know when 7.5 feels good? When you think rates will go to 8. That's where consumers are. We are operating in an environment of low inventory, especially below the median. We have been talking about a bifurcated housing market for a long, long time. Folks, it's not going to get any better anytime soon. We've got to build more homes. We've talked about lock-in. We've talked about mortgage payments going up $1,300, $1,700 to trade up. The move-up buyer is going nowhere. So what is happening? Beth Traverso shared with us yesterday in her market. I'm doing this from memory, so I might be off. So again, go watch the video. She gave us all the graphs. Prices up 20%. Inventory down 35%. Folks, please always remember, look at your buy box, look at your area, see what's going on below and above the median because you would be shocked. Let's talk about some earnings. We did get some earnings. United Airlines beat top line and bottom line, gave good guidance, but I find it interesting. They still lost money. I think they lost 15 cents a share instead of 40 cents a share. So that's an earnings beat, but still losing money. Travelers missed top and bottom, but did raise their dividend for something like the 19th year in a row, something like that. So shout out Travelers. U.S. Bancorp. U.S. Bancorp lowered net interest income and lowered guidance. Folks, this is going to be the quarter that you and I spend a lot of time looking at the regional banking system. Who is in trouble? Who needs a $1 billion infusion like New York, whatever that was, New York Community Bank, whatever that was. So again, we are going to be, or at least I will be looking at the regional banks. So what else? Chief economist Torsten Slok from Bloomberg says that no rate cut in 2024 equals hard landing in 2025. This goes back to the Fed is out of options. They're just holding on tight. Again, he's talking about the stock market being on a sugar high. He is talking about the stock market will eventually figure out no cuts in 2024. They will then adjust earnings, stock market pain, and you know where we go from there. So again, the stock market is waiting for and counting on rate cuts. And according to Chief Economist Tristan Slok of Bloomberg, if they don't come, hard landing meaning, of course, a recession in 2024. Folks, at the end of the day, I think Powell's been very clear. Higher for longer, higher for longer, higher for longer. Folks, I want you to have an amazing day. I want to apologize one more time if you felt a little clickbaity yesterday with that no emergency rate cut. Wasn't my intention. I just created what I thought was a cool title and a cool thumbnail with AI. So shame on me, bad one. I fixed it. Take care, have fun. Later.